Well, you want to know how I became a billionaire. All right, but I'm warning you. It's not the story you want to hear. There's no secret formula, no one weird trick. And if you're looking for something you can replicate by next Tuesday, you're going to be disappointed. I became a billionaire slowly. Very, very slowly. And mostly by making one good decision in 1962 that I stuck with for 60 years. That's it. That's the big secret. But let me start at the beginning, because the beginning is important, and it's not what most people think. I was born in Omaha, Nebraska in 1924. My family was comfortable. Not rich, but comfortable. My grandfather was a federal judge. My father was a lawyer. We didn't have money worries during the Depression, which was an enormous advantage that I won't pretend otherwise about. Here's what people don't understand. I had maybe a dozen advantages before I ever made a single investment decision. Advantage one, I was born smart. I didn't earn that. That's pure genetic lottery. If you're born with an IQ of 160 instead of 100, you're starting on third base. Anyone who tells you otherwise is lying. Advantage two, I was born white and male in 1920s America. That meant doors open for me that were closed to others. I didn't earn that either. That's just luck of birth. Advantage three, I was born into a family that valued education and reading. My grandfather had an enormous library. I read everything. By the time I was 10, I'd probably read more than most adults. Advantage four, I went to good schools. I went to the University of Michigan, then to Harvard Law School. Do you know how much Harvard Law cost in the 1940s? Almost nothing. I graduated with essentially no debt. Try that today. So before I ever invested a nickel, before I ever made a smart decision, I had advantages that 98% of humanity doesn't have. Let's be honest about that. I hate when rich people pretend they pulled themselves up by their bootstraps. I had a ladder, and it was a pretty good ladder. I graduated from Harvard Law in 1948. I was 24. I came back to California. I'd been stationed here during the war, and I joined a law firm. I was a pretty good lawyer. Not but good. I worked hard. I billed hours. I made about $300 a month, which was decent money in 1948. But here's the thing. I knew early on that being a lawyer was not the path to real wealth. You trade time for money. There's a ceiling. Even if you make partner. Even if you bill $500 an hour, which was unthinkable in those days, you're still trading time for money. I wanted to make money while I slept. I wanted capital to compound. So while I was lawyering, I started doing real estate developments on the side. Small stuff. I'd find a property, get some investors together, develop it, sell it, take my cut. And I did okay. I made some money. By the mid-1950s, I was probably worth a few $100,000, real money in those days. But here's what I learned from real estate. It's labor-intensive. Every deal is its own special project with its own special problems. Tenants, contractors, zoning boards, property taxes. You can make money, but you can't scale it efficiently. And you can't really compound it well, because you keep having to do new deals. I was getting richer, but I was also getting tired. In 1959, I met Warren Buffett at a dinner. We were introduced by mutual friends. I was 35, he was 29. We talked for hours, and I immediately recognized that this kid, and he was a kid, understood something I didn't. He understood the power of owning great businesses and letting them compound. See, I'd been thinking like a real estate developer: buy something, improve it, sell it, repeat. Warren was thinking differently: buy wonderful businesses and own them forever. At first, I thought he was crazy. Why would you just sit on something? Don't you want to trade up? Don't you want to do deals? But the more we talked over the years, the more I understood. The real money isn't in doing deals. The real money is in owning equity in great businesses and doing nothing. Warren was running this partnership, investing in stocks. He was getting 25–30% annual returns. I was working my ass off in real estate and legal work, getting maybe 15–20%. So in 1962, I started my own investment partnership. I was 38 years old. Now here's something important. I wasn't starting from zero. I had maybe 300 $1,000 of my own money, about $3 million in today's dollars. That's a huge advantage. I could afford to take risks. I could be patient. I wasn't desperate for returns. From 1962 to 1975, I ran the law firm and my investment partnership simultaneously. The partnership did extremely well. We averaged about 20% annually over 13 years, which compounded to roughly 13.7 times your money. If you'd given me $10 in 1962, you had $137,000 in 1975. But let me tell you about some of the mistakes I was still doing cigar butt investing. I'd buy terrible companies that were trading below liquidation value. I'd get that one puff and move on. It worked, but it was exhausting and it didn't scale. I was trading too much. I thought I needed to be active, to be doing things. What I should have been doing was finding wonderful businesses and sitting on them. I used a tiny bit of leverage occasionally, not much, but some, and in 1973, 1974, during that brutal bear market, it hurt. We were down about 31% in 1973 and 31% again in 1970. My investors and I lost more than half our money. That experience taught me something. The mathematics of loss are brutal. If you lose 50%, you need to make 100% just to get back to even. Leverage turns volatility into permanent loss. I closed the partnership in 1975. Why? Because I realized I'd rather own parts of a few wonderful businesses than run a portfolio of 30 mediocre situations. And by then, Warren and I were working together more and more at Berkshire. Here's where I became really rich Berkshire Hathaway. I started buying Berkshire stock in the late 1960s and early 1970s. It was trading at maybe $4 a share. Today it's over $600 a share. That's a 15,000-fold return. But here's the thing. I didn't do anything. Warren ran Berkshire. I was vice chairman. I showed up to meetings. I gave advice. I helped on some deals. But mostly, I sat there. We bought See's Candies in 1972 for $25 million. We still own it. It's thrown off maybe $2 billion in cash over 50 years. We bought huge stakes in Coca-Cola, American Express, Wells Fargo before they screwed it up, Apple. And we just sat there, doing nothing, for decades. The money compounded at roughly 20% annually for 60 years. Do the math on that. It's obscene. A 100 $1,000 becoming 560 million, just from compounding and patience. People ask me, what's your secret? The secret is there's no secret. We bought wonderful businesses at reasonable prices and did nothing for 50 years. We didn't panic in 1987. We didn't panic in 2000. We didn't panic in 2008. We didn't panic in 2020. We just sat there. That's it. That's how you become a billionaire. Now let me tell you what actually made the difference. It wasn't intelligence. I'm smart, but I'm not the smartest person I know. I know plenty of people with IQs of 180 who are broke. Intelligence is necessary, but not sufficient. What mattered more was rationality and temperament. Can you control your emotions? Can you resist doing stupid things? Can you sit there while everyone around you is panicking or speculating? Most people can't. It was time. Compound interest needs decades. I became a billionaire in my 70s, a multi-billionaire in my 80s and 90s. Most of my wealth came late in life. It was avoiding stupidity. I didn't use excessive leverage. I didn't chase things I didn't understand. I didn't follow fads. Avoiding stupidity is easier and more effective than seeking brilliance. It was partnership. Working with Warren was the best decision of my life. A good partner prevents bad decisions. It was reading. I read 3 to 4 hours a day for 80 years. Around 100,000 hours. That's how you develop judgment. It was luck. I was born with advantages. I lived a long time. I met the right partner. I survived. Luck matters more than people want to admit. So what does this mean for you? You probably won't become a billionaire. The odds are astronomical, but you can become wealthy. You can become comfortable. Start early. Find wonderful businesses and sit on them. Live below your means. Read constantly. Control your emotions. Avoid stupidity. Be patient. I'm 102 years old and worth billions of dollars. It sounds impressive, but the honest truth is I did one thing right. I found wonderful businesses and sat on them for 60 years. I didn't day trade. I didn't options trade. I didn't chase hot stocks. I didn't time the market. I found quality and sat there. And I lived long enough for compounding to do its work. You can do this. You need patience, rationality, and decades. Start now. Buy wonderful businesses at reasonable prices. Then do the hardest thing in investing, nothing. Yes, just sit there. Nobody wants to hear that because it's boring. But boring works. Boring made me a billionaire. Exciting gets you broke.